Well, 2018, yes, it was a bit of a year of consolidation because you're looking at the headline markets and you look at the mother markets, that's the United States and some of those European indices, they are sitting with cuts of around 7% to around 18% odd. But if you look at the emerging markets, well, the Brazilian index, that did very, very well. So that was up close to around 15% odd, while the Indian markets as well, relative outperformers in comparison to what happened in Russia as well as the Shanghai market, we were up roughly around 3%, while the Chinese market was trading at fresh 4-year lows, or that lost close to around 20% in the past year or so. But let's get straight to the Sensex. The Sensex did well. So in rupee terms, you'll say, well, we did well. We were up close to around 6%. But in dollar terms, keeping in mind that the Indian rupee moved from around that 64, 65 odd mark all the way to the 70 odd mark. In dollar terms, the Sensex was down close to around 3% odd. But let's get straight to the big indices and what did very, very well. The IT index as well as the Nifty Bank, both of them backbones of the Nifty, they gave you returns of around 6% to around 24%. But otherwise, there was pain in the broader markets, both the small cap and the mid cap space. We did see cuts of around 10 to around 20%. But quickly moving forward then, if we're looking at the IT index, it did well, I told you. It was up more than 20%. Some of those stocks in there did very, very well. Namely, Tech Mahindra, Infosys as well as TCS, all of them gave you big returns. But it wasn't just these stocks, some of those heavyweight stocks in there, ICICI Bank, HDFC, both of them put on weight, and even Reliance Industries is up more than 20%. And if you're looking at these top 5 stocks, they constitute more than 30% of the index. When they move up by around 15 to around 20%, that's telling you that they did the heavy lifting in the past year or so. Other winners include the likes of Bajaj Finance, that was up close to around 50%. Hindustan Unilever as well did pretty well in the last year or so. But there were some losers as well, and Tata Motors, that finds a mention in there. That was down more than 60% in this past year. And Yes Bank, plenty of issues cropped up. That stock was down close to around 40% in the past year or so. But moving to the broader markets then, and let's see how those stocks fared in there. Large cap IT did well, right? Some of those mid cap IT stocks, NIT in there with good returns. You have Mindtree as well in there. And it wasn't just the IT names, some of those consumption names as well did pretty well. So Nestle finds a mention in there, United Breweries as well, chugging some beers in there, as well as Britannia, up more than 20% in the past year. But ending up though, from the broader markets, we had some pain. PC Jewelers is down 80% from the top. Jet Airways as well did see a lot of erosion in terms of market capitalization. And even JP Associates was under some pressure. So to sum things up, this was basically a year of consolidation. 2018, in rupee terms, yes, we were higher. But in dollar terms, that's what FIs look at. We were lower actually in 2018 itself.